Stocks had a pretty good week last week, but they gave away a good part of these gains again at the start of the week yesterday. I remain cautious with regard to the upside potential for the market in general, but from a sector rotation point of view, a few opportunities seem to be developing. Hello sector watchers, welcome to the show. This is the 154th episode of Sector Spotlight for Tuesday the 29th of November, and I'm recording it on Monday the 28th, after the close of the US markets. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. It is the last Tuesday of the month, which means that it is time to look at seasonality again. I'm skipping the asset class rotation for this week and jumping straight into the sector rotation after discussing the seasonal patterns. Spoiler alert, not much to gain from seasonality in the coming month, but there are a few interesting rotations in individual sectors. Ladies and gentlemen, this is Sector Spotlight. When we look at seasonality for the S&P 500, or SPY in this case, we can see that the later part of the year, Q4, so October, November, December, is indeed the stronger part of the year, a stronger part of the year, as what everybody's talking about right now. I see all the news headlines about that we are entering or are in a strong seasonal part of the year. And historically that is indeed the case. You can see that in October S&P ended the month higher 60% of the time. In November it was even 80%, that's one of the strongest months. And in December 75% of the time the S&P 500 closed higher than it opened. And if we look at the chart of the S&P 500 here on the right, this is the daily chart, so it gives us a granular view of the behavior of the market over the last few months, then we can see that August, which is kind of in the middle, 60% of the time closing higher than it opened, that did not happen. So it was the turnaround month was the month of August. And then you see that September was actually a really bad month. And that is in line with the seasonal pattern. Only 40% of the time the S&P in the month of September closed higher than it opened. In October, you can see that we initially had a bit of a dip, but then in the end of the month we closed higher. So that came back in line with the expectation that October is a good month for the markets. And then we have November, which is still ongoing. We have 2 more trading days to go. The close in October was 386 and the month opened 390, so around 390. And we're now at 396, 395.90 was the close of Monday when I'm recording this. So still a plus. But again, the month is not over yet and it looks as if the market is running into resistance, and there are a couple of things that we discuss in another part of the show that are still sending signals that the market is under pressure or expected to be under pressure. So I am not sure whether this 75%, which is the historical percentage that the market would be ending higher, if we are actually going to achieve that this month. When we look at the table for the seasonality for the various sectors, then we can see that there are no real outliers, not on the top end, but also not on the bottom end. So most of the months there is a sector that has about 30% of outperformance, which means that in 70% of the cases the sector was underperforming, or we have a 70% or 80% month. But that's not the case here in December. So the highest value that we currently have is for communication services, for XLC, at 67% of the time outperforming the S&P 500. Other than that, it's all very close to 50, 55. XLU goes to 60%. that's the other one. And then we've got consumer discretionary, and we've got technology going to 40%, which means 60% of the time underperforming. These are not super strong numbers, not something that I would make a call on or as a takeaway for an actionable idea. So basically the only one is communication services that's worth looking at, and we will do that in a minute. If we move to the percentage performance numbers for the various sectors, then we see one big exception. That's for real estate, with an average performance historically of 2.6%. The problem here is that XLRE is a relatively new sector. It didn't exist all the time. It didn't exist for as long as history is available for the other sectors. That makes that number, that 2.6, a little bit flawed. I'll take it with a grain of salt, especially in the current market circumstances. If you look at communication services, so XLC, historically we have seen 0.8% outperformance over the S&P 500 during the month of December. So that's kind of in line with the expectation for a strong seasonal month for communication services in December. Now let's have a look at what we can find in terms of rotation on the RRG and maybe the chart that goes with that. Looking at the RRG for sectors and then highlighting XLC, communication services, shows us that the sector is still inside the lagging quadrant, moving lower on both scales, so that is pushing further into the lagging quadrant. It's actually one of the weak, well, if not the weakest sector, together with XLRE. Those are at the same level in terms of RS ratio. So that makes it very doubtful whether XLC is going to be able to actually outperform the S&P 500 in the coming month. If we quickly look at the price chart for XLC, then we can see that that downtrend is still very much intact. It's very much in play. And price has been pushing against that falling resistance line for the last 3-4 weeks. Every time with a lower high in the weekly bar, not being able to push higher, so that overhead resistance is definitely a factor to take into account. And then also look at that relative strength line, which is still pushing lower highs, lower lows, and those RRG lines are moving lower again. So from a seasonal perspective, I find it very hard to make a case, an upward case, a bullish case for communication services as a sector that can outperform the S&P 500 in the coming month. It's all still possible, but with this type of rotation on the RRG, a price chart that is in a very strong downtrend, relative strength that's dropping like a stone, I don't think that that is worth making a big bet on. If we quickly look at the daily rotation, so that's the shorter term version of that RRG, and then we find XLC inside improving, so it had a bit of an up move, but you can see it's already rolling over before it's even closing in on the 100 level on the RS ratio scale. So not even on the daily RRG, the daily tail, we can find some evidence, some suggestions that communication services will be one of the stronger sectors in the month to come. So from a seasonal perspective, I'm afraid that we'll have to do it with a mildly bullish picture for the S&P 500, which is under pressure, and basically no real takeaways from sectors, at least not from a seasonal perspective. For sector rotation, I want to take a look at the daily and the weeklies side by side and go basically toggle through all 11 sectors and see whether we can find matching rotations or confirming rotations on both the daily and the weekly RRGs, and or whether the other rotations are conflicting. And I think we can then find sectors that when they are confirming, so when both the daily and the weekly tails are in line, that gives us tradable, actionable ideas. Whereas when both tails are conflicting or confusing, it's also a signal, it's also a message. Basically the message there is that market is unsure, rotation is unsure, better look elsewhere to put on any potential trades. Let's do it in alphabetical order. So let's start with materials. Materials has been a pretty strong sector for quite some time already on that weekly RRG. Look at that almost straight line moving into leading. The corresponding daily tail is rotating into weakening from leading, but you can see that it is the strongest sector in terms of RS ratio on that daily RRG. The message here is that the longer term trend is strong, the shorter term trend is going through a bit of a setback, but I'm very interested in the materials sector when that daily tail starts to rotate back up within the boundaries of that weakening quadrant. I think that is the main takeaway for the materials sector. Let it be for now, but when that daily tail starts to curl back up and that weekly tail is still in good shape, that could probably give us a good opportunity in the materials sector. Communication services, we already spoke about that when we were talking about seasonals. That weekly rotation, that weekly tail is still weak, and we already saw that daily tail rolling over, so no need to talk about that much more. It's probably still one of the weaker sectors. Energy, far away from the center, far away from, detached from the other sectors in a strong way, high up inside the leading quadrant, and after a bit of a setback now starting to pick up again. If we look at the daily tail, you can see that this weakness here translated into that rotation of the XLE tail, need to select it, through the weakening quadrant on that daily RRG, and it's already starting to pick up a little bit of momentum. Here also, just like materials, the long-term trend is really strong for energy. The near term seems to be going through a bit of a correction, but as soon as that daily tail starts to point into that positive RRG heading, that 0 to 90 degree RRG heading, then just like in materials, the energy sector can probably give us a few very good trading or investing opportunities from the long side. Financials, inside leading on the weekly. It looks a little bit like energy, but not as high up on the RS ratio scale. Good period, then a couple of weeks of a loss of momentum, and now starting to move sideways higher on the RS ratio scale. If you look at the daily, then here also you see the daily tail inside weakening, but flattening out, and potentially already starting to pick up on that momentum scale. Quite similar. I don't know, it's not, I haven't sorted it like that, but the first three sectors, they're all in a long-term rotation. It's pretty strong. The shorter term, the dailies are going through a period of weakness, but all three, when they start to curl back up and they come back in line with those weekly tails, they can give us good opportunities. They could provide good opportunities for us. Industrials, again, one of the stronger sectors. Again, I haven't done that. It's quite funny actually. These are all pretty good. The weak stuff is still coming. so that tail, that XLI tail, is super strong. It's almost a straight line. You can see that the distances between those weekly observations, that we call that RRG velocity, is increasing, and that is a good thing. The last week it's shortening again, and that's why we have that rotation through the weakening quadrant. But you can see that the last few observations, today is actually already included here, starting to pick up again. So when that daily tail turns into 0 to 90 degrees, coming back in line with the industrial sector tail on the weekly RRG. That could be one of the strongest sectors, could be one that provides good opportunities. And now we start moving into the lagging quadrant. Here's technology inside the lagging quadrant. Last couple of weeks picking up in momentum, got to give it that. But if you look at the daily tail, then you can see that it's already rolling over inside the leading quadrant, while the weekly tail is inside lagging. Nevertheless, it's picking up in terms of momentum. But the fact that the daily tail is already starting to roll over and lose relative momentum makes it hard to believe that that up move here is very sustainable. So technology is confusing at best. That daily tail is rolling over, going exactly the opposite direction. The sectors that we had, so materials, communications, well, communication services was bad, but energy, financials, industrials, these were all strong weekly tails with the daily going through a bit of a correction, possibly setting up for a good move. Technology, on the other hand, is inside lagging, and the daily is already rolling over. So that's not really a situation where you can see a setup preparing. If you look at consumer staples, that weekly tail is rotating back into leading. That is a good thing. So consumer staples seems to be coming back into the game. It's a defensive sector. And you can see that it is in line with that daily tail that is rotating and rapidly moving into that leading quadrant. Obviously, when I'm recording this on Monday, that was a pretty weak day for the market. And you can see that defensive, so staples in this case, immediately had a good move. You can see how long that distance is between the two observations from Friday to Monday on that daily RRG. So it's coming back in line with that weekly tail. It's making XLP one of the strongest sectors, actually right now already confirming both the daily and the weekly rotations. If you look at real estate, that is inside the lagging quadrant, you can see that the up move that we had here is the positive stint, the positive rotation that the real estate tail went through. But it started to roll over. It's now inside weakening and it's pointing towards the lagging quadrant. This will very likely move towards and into the lagging quadrant with XLRE at this low reading on the weekly scale. That doesn't make it a very good sector. As a matter of fact, it makes it one of the weaker sectors. So here is utilities. So these defensive sectors, they've broken apart. They're not moving in tandem anymore. Look at that weak tail, that weakness in the utility sector, strongly moving into the lagging quadrant. And if you look at utilities on that daily, it's pushing into the leading quadrant. As I said, today was a weak day in the market, so you see that defensive sector pushing ahead, but with the weekly tail pushing so hard in the opposite direction, I don't think that these are now confirming. They're not even close to confirming. So here also a pretty confusing rotation. Near term looks good for utilities. That's obviously driven by weakness in the market on a day-to-day basis. But that trend here, that longer term trend for utilities is clearly negative. That is at an underperforming trail right now. If you look at healthcare, that's the third defensive sector. It's still inside leading, but I don't like the fact that it is rolling over here. That is not a very nice move. And if you look at the daily rotation for XLV, you can see that it is in lagging and it's pushing up. Again, it's a weak day for the market today, so you saw that defense was picking up. But I hope that you agree with me that that weekly tail is rolling over and the daily is coming back. This is also contradicting, so here there is no very good takeaway in terms of defensive sectors, all moving in the same direction. Actually, the only one that is moving in line with its weekly tail is the consumer staples sector, which is kind of odd. There's some strange things going on there which we need to take into account. Finally, we have consumer discretionary, and that weekly tail for a long time already is pushing hard into the lagging quadrant. We discussed that already a couple of times. Talked about it last week, compared it with the equal weight sector. Conclusion was that the cap weighted sector is really, really weak, obviously driven by big names like Amazon and Tesla. That's still ongoing, and you can see that the daily tail is now already rolling over while inside the improving quadrant and getting back in line with that weekly tail. So the consumer discretionary sector is actually confirming its weakness at the moment. Let's take a look at a few of the individual charts as we just discussed them on the RRG and see if we can find any levels that we may want to take a look at in the coming week. Let's wrap it up with a look at a few of the price charts with these rotations. We start with materials. As I said, that tail is very nicely moving into the leading quadrant. And you can see that here on the RRG lines. In terms of price, we're pushing against overhead resistance around 82.50, 82.5. That needs to be taken out in order to unlock the remaining upside potential for XLB to push towards its highs around $90. In terms of relative strength, it's still good. If we can overcome that price resistance, then materials can go up a little bit further. A very interesting tail, I think, comes from financials. You see that it is already inside the leading quadrant, lost a bit of momentum. You can see how that relative strength line is in that slightly down sloping channel, but pushing against the resistance area here. But look at price. 36 is a pretty clear overhead resistance level, and you can see how many times it was tested and respected in the past over the last, say, 2 years. If we can push above resistance near 36, I think that financials could be in for a nice further rally towards the 40-41 area, which will also include an improvement for relative strength versus the S&P 500. So that makes financials one of the more interesting sectors to keep an eye on, because that could be some sort of a... That looks like a nice double bottom, quite a big double bottom. If that breaks, there's plenty of upside potential. Industrials, that's another of those sectors that's doing really well. That tail inside the leading quadrant, pushing further ahead. The relative strength here is already broken out, so that is already good. And you can see that just like financials, XLI looks to be almost completing a big double bottom pattern. And for industrials, the area is around 100, 101. So the start of the week wasn't that good. Last week's high was 101.50. So I'd say that this week, if we could take out 101.50, 102, preferably at Friday's close, that would make a very good trading opportunity for the industrial select sector fund. Consumer staples also rotating back into that leading quadrant from after a stint through weakening and now moving into leading again. Here also overhead resistance in the area around 76.5. If we can take that out, that'll probably also push that relative strength line above its overhead resistance, which will unlock a further rise in the RRG, a further rotation into the leading quadrant, which will then be backed by a strong move in terms of price. We're not there yet, but one of those sectors, together with materials, together with financials, with industrials, if we can break those overhead resistance levels within that sector, there's definitely room for further improvement. And now on the other side, we have technology, which is in terms of price still in a very clear downtrend. We didn't manage to reach the upper boundary of that falling channel. I don't like that when that happens. And the relative strength line is now testing its former support level as resistance. That makes it still a weak chart from a relative point of view. And then if we wrap it up with consumer discretionary, that story didn't change much. That tail is pushing deep into the lagging quadrant. And in terms of price, well, here you can see that we're already broken below the previous low in terms of relative strength. That is a very weak sign in terms of relative. And in terms of price, 130 seems to be the level to watch. 130, 131. If price breaks below 130, XLY will very likely accelerate lower. And with XLY and XLK in a downtrend and on the verge of breaking even further downside, that makes it very hard for the S&P 500 to be super strong. To translate all of that sector rotational view into the price chart of SPY, I'm gonna wrap it up with the chart of SPY, and you can see that that downtrend line is still in play, and it looks as if we're kind of putting in a new high here, not even reaching that falling trend line. 4029, that becomes an important level. 410 is still the previous high, so that's an important level to watch too. But it looks as if we're now once again running into overhead resistance. You can see here that last week we had that peak, so that 402, 403 area is now building up as resistance, with 410 being the area slightly higher. A lot of overhead resistance in the S&P 500 will make it very hard for the market to push higher. We've identified a few of the sectors that could possibly provide us with interesting trading opportunities for the long side. For the market as a whole, I remain very cautious. And that's it for this week. Thank you for watching. Please remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. I'm looking forward to seeing you again next week for a new episode of Sector Spotlight. Same time, same place.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.